Crisis, inflation, recession, are we about to lose all of our money? Well, I'm with my business partner, Richard. We own a mortgage company together, and today we have some questions that hopefully will help you feel more comfortable with what's going on in the market today. Question number one, why did we start the mortgage division? I'll go first. So Rich was around me for about a year, and he was a mortgage broker at the time. I saw how amazing his communication was. Every customer and every client that I came in contact with was like, he's amazing. And it just seemed to me like natural progression. We had the network, he had the knowledge, and it was a great fit.
Yeah, similar. So I left my last job to go self-employed mortgage broker. Met Steve through the property circle. I could just see where it was going and it made sense. So just link up. I could see how big it was going to be, yeah. So,
yep.
No-brainer.
No-brainer. Question number two, what services do we offer at the Property Circle Mortgages? I'll let Rich take this one because he's the guy that's in the know.
So we offer all property finance, so residential mortgages, buy-to-let, bridging and commercial, and also development finance. But we also offer protection, so life protection, critical illness, and income protection.
And I don't think people actually understand the importance of life insurance and critical illness and all these other policies that you can take out. If you are looking after your family, if you want to make sure that you're covered in case you have an illness or something goes wrong, these policies are super important, aren't they?
Yeah, I think they're massively overlooked. Without trying to make it sound like a sales pitch, people will spend, £5, if not more, a week on coffee. They'll protect the boiler, they'll protect the phone. They get insurance for everything apart from themselves. And I think if everyone thought about it, they all know someone close who's either gone through some sort of critical illness or, even died young and been caught out. So I think it's vital, and I think people just overlook it, yeah.
Yeah, so that's something else that we offer as well. So
question 3 is, how are we finding the market right now?
For me, in my position as a property developer and a property investor, it's awesome. Right now, I'm getting deals sent to me. Not everything checks out, but I'm getting sent deals to me left, right and centre, more than I've ever had during my 9-year career. It seems to be that anybody that got involved in property during COVID is now trying to scramble their way out. Now the refinances are coming in and the interest rates are increasing. They're just literally trying to just recoup some money. Then you've got the people who've been in it for a while, who are coming to the end of their career, the experienced landlords. They're just trying to sell off now because a lot of people are seeing the UK for the next 5 years as a no-go zone. They don't want to be here. So a lot of people are actually going abroad to live and moving out of the way because they've done their thing. They've made their money. They've been through recessions. They've been through crashes. And now it's time to just get rid of. So that's happening a lot. Portfolio landlords especially. And estate agents, because so many people are buying properties and then they don't understand the stress tests and things like that, and they're falling through at the last minute, and then they're having to relist them. Estate agents are actually starting to get a little bit touchy, and they're like, we don't know here. So they're contacting people like me and other developers and investors and saying, listen, we've got this. Are you interested? So for me right now, the market it's awesome.
Yeah, so the best way I can describe it is probably from a mortgage point of view, like a roller coaster. So people have had, a good, I think it was 12, 13 years of the interest rate being below 1%. So now we're at 5.25. It's a big shock to a lot of people. When they originally started going up, it wasn't so much chaos as if it's been, but we think back to this time last year with Liz Trust and the mini budget, and the market first went into meltdown. Then all the lenders' swap rates went through the roof, and there was sort of no stability. It sort of, obviously Liz Trust then resigned, the Chancellor left, things seemed to calm down again. But even this year alone, I think April, May, inflation wasn't where it needed to be, caused a lot of panic in the market again. but then June, July and August, it's settled again. And obviously the latest Bank of England announcements is they kept it the same, which is positive news, but you know, we're not out of the woods yet, so it's really how the government is going to, you know, get that inflation down to the 2% target where it needs to be. But yeah, it's still been a big roller coaster.
Yeah, definitely. So question number 4 is directed straight to the main man. What makes a good broker?
So you get a lot of brokers who will, you know, say we've got access to these products, we work with these lenders, we can get this rate, that rate. Most brokers have the same access to the same lenders, the same rates. So I don't actually sort of use that as a sort of USP, if that makes sense. Like, I think the biggest thing is communication. Someone who understands, you know, what's going on and people's circumstances. So you get brokers out there that's Monday to Friday, 9 till 5. Obviously, we don't work like that at all. You know, it doesn't matter what time of the day it is, you know, what day of the week it is. We'll get back to that client, especially if we know things are urgent. And, you know, anyone can sit here and say that, but it's, you know, the clients speak for themselves. So the biggest one is communication and being available to them. Then the busier you are, the better relationships you have with lenders. And what I mean by that is being able to have direct contact with people at that bank. So sometimes if you're not as busy and you haven't got that relationship, you might have to send an email in and wait 48 hours for that to respond. Whereas when you've got direct access, you can pick up the phone and you get the answers you need quick, which, especially with the clients we're working with investors, you need to turn that around quite quick. So relationships with lenders, not in terms of what rates you can get, because we all get the same rates, but just how quick you can get the answer and then how quick you give that back to the clients. I'd say they're massive things.
Yeah, I like the fact that the feedback that I get, because obviously with the property circle, we have a lot of people who send family, friends and stuff like that. It's when there's a problem, Rich is able to pick up the phone and speak to the lender to solve that problem in a very short space of time, because some lenders, like he said, it's a 48-hour reply, and if you don't get the answers you need immediately, you can genuinely lose the deal. And if you lose the deal, the feedback is awful. So the fact that Rich is able to correspond with lenders on a phone call, even a WhatsApp, it just massively helps. So, you know, I see it from the other side, because people comment and call me consistently and say he's doing a fantastic job and he was able to resolve an issue that we had. Again, down to anybody who's got CCJs, anybody that's got missed payments and stuff like that. There's always a solution as long as the communication's on point.
We're big at building the relationships with the lenders. Obviously, Steve will see themselves. We have a different lender in here all the time to build that relationship with them. And we do that because we know it benefits our clients. So we're never too busy to, you know, have that phone call, that chat, that meeting with the BDMs for these lenders, because we know it benefits our clients in the long run. Question number 5, who do we think's been affected the most in this market?
Newbie property investors have definitely been affected because they don't understand it. They've not been through anything like this. They've not been through any market crashes or any price drops. Most people who have been involved in property for 2-3 years have actually just been like that. And everything that has been touched by them has turned to gold, basically. They've not had the ups and downs. Then all of a sudden, after 2 years, and the interest rates have gone up 4 times multiplied, and they're like, we're breaking even on properties that we bought, 10% decrease in end values. It's just literally caused them all to panic. Experienced people are seeing it as well. They're like, okay, our profits are being cut, but they understand certain things. You can forecast what's going to happen when you're in an industry. If you're brand new to it, you're just going with the flow, and then when something happens, like the interest rates go up and all the other stuff that's been going on with inflation and stuff, it's quite hard for you to understand it if you've never done that side of things, basically. So newbies to me are the ones that are really struggling, and it's quite sad to see, because it scares a lot of people out of continuing, because a lot of people, instead of trying to fight through it and figure out alternatives and pivot, maybe turn their properties into something else that can make a little bit more money, that can help with the interest rates rising, their first response is to sell, get rid. I don't want to be part of this. It's not good for the next generation of landlords, in my opinion.
Yeah, no, I agree with that. Newbie investors, massively. They haven't had enough experience in the game in general, never mind in this market. And obviously homeowners, people who have bought their house in the last couple of years, got like a high loan to value. Maybe they put a 5% deposit down 2 years ago. And they got used to paying a certain rate, and they've come to refinance now, and they're really feeling the pinch. If they flip that to a first-time buyer, they've got no experience with mortgages, so it still really boils down to them, can they afford it or not. They've got no past, rates to go off. So I'd say, obviously homeowners who have got high loans of value equities, and definitely newbie investors. Yeah.
Homeowners is a big one, isn't it?
Yeah.
And they're having to remortgage. That's a big one. Next up. Question number 6. How does your credit score impact your mortgage eligibility? Okay, so of course it has a big impact. The better your credit, the more options you're going to have, especially, for residential buyers where they want to go to the high street lenders. So CCJs can have a big impact. So it's vital you keep on top of your credit file. The amount of clients I see who we put an application through, they've told me there's no blips on their credit, and we find out there's a CCJ that they've never known about, which could be to do with a car parking fine or, an old utility company from when they moved house. So you can still get mortgages with adverse credit. However, it does make it more difficult, and you will pay higher rates or potentially need to put a higher deposit down. So in this market, with the rates already being high anyway, it's something you want to avoid. So, we always advertise to use Check My File, because this shows the 4 credit reference agencies. Keep on top of this. I think it's $14.99 a month. It's vital you just keep on top of it to make sure there is no fraud in the background, make sure you haven't missed anything, because it can come to catch you out when you come to buy a house. Yeah, and this is no paid ads. We don't get anything from it. But below is the link to Check My File. Sign up below, guys. Keep on top of your credit score. Super important. Even in business, anything like that, it's below. The link is there. Check My File is who we are big advocates of. Question number 7. What should you consider when picking a mortgage product? Okay, so this question is quite personal. It's going to be, each individual circumstances are going to differ. So there's fixed rate, there's tracker rates, there's discount rates, there's also 2-year fixed, 3-year fixed, 5-year fixed. It's hard to answer the question because everyone's circumstances are different. Some people might not want to be tied to these rates for too long, so they say, let's go for 2 years. Some people might not want to keep changing around, and they just want a longer fixed period just so they don't have to keep doing the whole mortgage process. If we talk about buy-to-let, the stress test for 2-year fixed and 5-year fixed, and depending on the deal, sort of can push it towards what it needs to be. So it's a difficult question to answer because everyone's different. But if anyone needs any advice with anything, obviously just get in touch with us and we'll be more than happy to help. But there's a lot to go into it. Even talking about what we think's going to happen in the market going forward, even though no one can guarantee and no one's got a crystal ball, it's still nice to have that chat regarding inflation and what's been going on previously to try and help the clients understand it and make the right decision for them. Okay, good advice. Question number 8. What are some of the misconceptions that people have when getting a mortgage? Well, I can tell you one that I get messaged all the time, and Rich will be able to enlighten us on this. Buy-to-lets. Everyone messages me saying, I have no history on my company. And I'm like, you don't need history on your company. You're okay. If you want to get a buy-to-let, if you want to get a bridge, you can set a company up on the same day and actually get approved that day. Massive misconception in my eyes, and it's the one I get asked all the time. Yeah, massive. People think their limited companies need to be trading for a certain amount of time, but as Steve just touched on, it's not true. It's based on the director. So what the lender's criteria is, if the director meets that criteria,
then you'll be able to set up a limited company that day and purchase the property in the same day. Again, it's wide range because lenders' criteria vary so much and experience of the applicants vary so much. So again, it's personal choice, but yeah, it's something that you can do that we do get asked a lot. Same with refinancing within 6 months, that's another one. So a lot of people feel you need to own your property for 6 months before you can refinance it. It's not true. You can do a refinance from day one. However, lenders will only refinance at the purchase price unless you can prove to them how you've added value.
So you need to keep all your receipts and stuff, don't you?
Yeah, so it could be before
Invoices.
and after pictures, invoices, bank statements showing payments, just to show them as much evidence as you've got, how you've improved the property. Self-employed is another big one. People think if you're self-employed, you struggle more to get a mortgage. Again, if you've been self-employed for a couple of years and you've got the right tax documents, it's pretty much the same as being employed. So yeah, there's probably 3 of the big ones that we get on a regular basis, yeah.
Yeah, if you guys have got any questions that you want answering that you don't know the answers to, no question is a stupid question. Comment below. We might not do another video on it, but we will definitely respond to you with the correct information if we know the answer. Yeah. So comment below, let us know if you've got anything that's stopping you from starting today. Guys, if you like this sort of content, please smash that like button. Please subscribe to our channel. It says that 65% of our views are by people who are not subscribed to our channel. Help us grow, guys. Help us get in the algorithm. Please subscribe to the channel and comment below what type of videos you want to see us do that can help you. Question number 9. What kind of deposit do you need when it comes to mortgages? Again, this is one of the biggest questions that we get asked. You've got residential deposits, you've got buy-to-let deposits, you've got bridging deposits. It varies on experience, it varies on lenders, but here are some of the answers that you guys can follow, but again, it's all down to you as well.
Yeah, exactly that. So residential, the deposits can start from 5% and obviously just keep ranging up depending on circumstances. Buy-to-let, on average, is 25%. Again, there are some lenders out there that will do 20%. Bridging, again, on average, it's 25%. And commercial, yeah, 25% plus. Like Steve just said, it's each individual circumstances and also on the deal that you're trying to do. But there's a brief overview of the types of deposits that you can use, yeah. Yeah,
and also another misconception on this as well is, so going back to the question was asked previously, sometimes a lower deposit is not the way forward because it can affect a certain interest rates as well. So just because someone's saying they can give you a bridge for 20% instead of 30% or 25% instead of 30%, there's lots of things that you need to add up to make sure it's worth it. Application fees, solicitors fees, all these kind of things get taken into account. So don't always just look for the lowest deposit because it doesn't always work like that.
No, 100% not. And again, if you're using the correct people, they should be analysing them deals for you anyway to present it back to you to make sure that your property deal stacks up with what you're doing.
Yeah, because as a mortgage broker, you have to have your client's interests at heart. So you can't direct your clients down to the most expensive product because you get the biggest fee for that. Because when you get an audit, they want to know why you're doing it. So you have to make sure that you have got the best product that suits the client. And that's what separates great mortgage brokers. They will use the information that they have to hand correctly, in my opinion.
Yeah, no, again, 100% right. Every lender has a different process. So there's lenders out there that are, from a broker's point of view, that's easier to deal with. You know, they might ask for less documents, they might underwrite it quicker, it might just make your life easier. But that doesn't mean it's the best deal or correct product for the client. So we don't worry about any processes. It's all about getting the right deal for the right clients, not what's going to make our life easier. If we have to have 10 more phone calls, a lot more emails, get a lot more information for that underwriter, you know, we do it as long as it's the right deal, yeah.
Because it's word of mouth, customer service, feedback, everything like that grows your business. Question 10, the final one of the video. Guys, if you like this video, if you do like this video, please let us know because we've not done a video together before. It's the first one and we just want some feedback on how you guys have found it. But question 10 is, I forgot. Question 10, I forgot what question 10 was.
What advice would you give people to get a mortgage?
There we go. See how the professional always shines through. What advice would you give to people trying to get a mortgage or finance in today's property world?
Yeah, so obviously first and foremost, make sure it's affordable. So if you're just being a homeowner, a residential, a first-time buyer, of course it's got to be affordable. Don't stretch yourself too much. If you can put a bigger deposit down, put a bigger deposit down because it will benefit you in the long run. Don't try and stretch yourself too much because, look what's happened in the last 2 years. And as we discussed at the start of the video, a lot of people will be getting caught out now when they're coming to refinance. When it comes to your buy-to-let investors, you've basically just got to play it by hearing and sort of crack on with it if you're serious about it. If you think back to all the previous years, there's been something where people have told you, don't buy property, whether it was, Brexit, change in tax rules, COVID itself, now interest rates. There's always been a time where there'll be certain people saying it's not the right time to buy. So as long as your deal stacks up, you've just got to get the right advice and go for it, basically, if you're serious about doing it.
Yeah. You got to start. You've got to start, but you've got to start with the right broker. You need to get people like us who have your best interest at heart. You need to get people like us who have connections with lenders where if there is an issue, we can resolve them. We will provide you with the best product that's out there that suits your needs. And word of mouth, it's just as important as anything. Speak to people. If you're watching this video and you know people we've got mortgages for in the past or we've got finance for, speak to them. Ask them what their journey was like. Word of mouth is the best form of credibility there is. So, yeah, you know how I always say, we're the greatest, we're the best at what we do. Ask. Go and check us out. It's not a joke.
And finally, education as well. So the amount of investors that I see come to me and they've watched a couple of videos or podcasts or whatever and they go out trying to invest in property without the correct knowledge, you'd be surprised. And even the knowledge they've got from certain people out there is quite embarrassing, to be honest with you. So definitely make sure that you know what you're doing before you start putting all your hard-earned money into property. That's what I'd definitely say.
Yeah. Plug time. Join the property circle. Join us. Just pay the £250. Join the circle. See what's going on. Give us 1 month to prove to you guys that we are the best at what we do. We are #1, 2-time property award winning. Now, I can't do that because I'm not taking myself seriously. Guys, we'll see you soon for another video.